Good evening, all. Ira Epstein, and here we are with your metal market update. And this update is for the evening of Thursday, and we're at the 2nd of March, 2023, and we're at 6:03 p.m. Central Time. My brain's going as we're talking. We had a great webinar today. I thank so many of you for attending. I think you'll find that you learn a lot. We go through this pretty quickly. The thing that I keep watching is the bonds and notes aren't getting that much of a bounce. We had a good bounce in the stock market today, a solid bounce. Haven't had one of these in a long time. The market at the end of the day added big amounts in the last hour of trading, but the short covering began actually around mid-morning, and it lasted, and it just started building on itself. Okay. It's entitled to do that. Did we make a trade bottom low? We might have. That's one of the things. Do I think that you're hurting the gold off this? No. Even with the dollar up 56 points, that's a lot. It's not a small move in that. With it there, you're still in the 1840s. Remember, we were just down to the zone, if you'll recall, of the 1814, 1810 mode. So that's where we're at. You know, I had one character wrote me on the YouTube page, and I do respond to him. And he goes, "You were bearish." I haven't been bearish on gold. I have been telling you I'm looking for a trade bottom. I started talking 2 weeks ago. Maybe we'll see a 72-day cycle low. That's one possibility. And I was looking for between the 200 and the 100-day average to see support. Have I joined the bull camp? Not completely. We might, but not there yet. But do I think a trade bottom's in? Oh, yeah, that I do think is in place. I was very much surprised at the huge break in copper today early on. The market was down 8-9 cents, so it was giving everything up that it's picked up recently. That has to have something to do with China, but I don't know quite what it is. So we'll find out. So when we come to the gold market, let's talk on the weekly chart what this market has done. It came down, challenged the 18-week average of closes in red, and it's held it for that period of time. We are up for the week 2%. When we come to the daily bar chart, we dropped down, found a trade bottom down here. That's what I think at least has happened, and the market's been lifting up. Why have I not completely joined in the bull camp? Here's the reason why. You still have the pattern of lower highs and a lower low. However, now if you take out 1850, 250, you change the whole pattern to one of higher lows, higher highs. Where's the averages? You got to close. Remember I just said 1850, 250. You got to close over 1850, 140. So if this market were to close over 1850, 140, yes, I think the market has turned bullish. The risk would be not to get back under on this first break, 1835.90. And the potential could be wherever the Bollinger Band comes in, it's 1881.90. So where's the momentum in all this? The momentum is just beginning to turn up. It's nowhere near overbought. So I'll stick with what I just said. For that one wise guy, I was looking for the market to come down. And by the way, all these YouTubes are there. So if you don't believe me, go look at them. All right, they're there. I didn't take them off YouTube. And you could see that's what I was looking for the market to do. And it did it. That doesn't mean I'm right. I'm not right. I was looking for support based on those averages and that. It hasn't given the buy signal yet. That's what I'm waiting for. And by the way, when it does, I can be wrong. I'm Mr. Swiss Cheese. Who isn't wrong from time to time? The guy you find on YouTube that is right all the time, go with him because he doesn't exist. Nobody exists that can be right all the time. In the silver market, you got lower highs, lower lows, and guess what? Remember we talk about embedded readings. So you know that you lost the reading there, but let's go back a little bit. Let's come right over here. If you'll recall, looking at this, the numbers are staying, both numbers under 20. Now, if you can get one over 21, that's the number I need, not over 20, not over 20.75. I need it over 21. You slip back, and that's today. But tonight, you're getting the pop. It's not the settlement yet. You can pop and lose it back, but it's a sign that silver wants to come alive and make a run. Now, it's going to have layers of resistance. The first resistance will be the 200-day average in gray. That's this one that you see me right here, and then up to the 18-day average of closes. The next one in copper, let's take a look at that. I think you're going to be caught between the lower and we'll see if we can get up to the upper Bollinger Band. But this is the whipsaw action of a market that is caught in the sideways bands. And what do I teach you? And I say this all the time. When you see that type of sideways action, run away from that chart. It is rare that you're going to just be able to catch the move out to the upside or downside. It generally doesn't happen. In the platinum, we have higher lows, higher highs. The market's holding the 18-day average, but you're already overbought. Would I tell a client to buy an overbought market? Why? You're either betting it's going to embed, and who knows, generally you don't, or how do you correct an overbought condition? You break and you get rid of it. I don't want no part of it. Let it do its thing, embed or break, and I'll make a decision. In the palladium market, you had lost the embedded reading. I'm still looking for price in the 18-day average to come together before the market gets under this low right here. That's the bet that I think it makes sense. So you put that all together, you come up with the game plan. I can't wait for the morning tomorrow because we're at crux points. Now, I'm going to cover for you in the morning 40 different markets, all the different vehicles in the futures market. My morning video starts, by the way, the introductory price, $7.95. So what do you get for $7.95 in case you're interested in that? You get 40 videos Monday through Friday. Not 40. You get a morning video Monday through Friday covering 40 charts. On the weekend, you get another video where I'm covering the weekly chart. So we're going to talk the longer term. And when I'm covering these charts during the day, my friends, I'm also flip-flopping sometimes back and forth from daily to weekly charts. If I see the daily's got to buy, the weekly's got to sell, I just walk away from the trade. I don't want that. I want them to be together in some manner, not fighting each other. That's the very important thing. Will I put out specific buys in the morning? Absolutely. Sales in the morning? Absolutely. Stops on trade? Absolutely. Embedded trades, trade with what you have to do. Where's the entry spots to come in? For $7.95, you're going to get charting software to go with this, our application, if you will, that you can use on your phone. You can see the charts and everything going on. It's a pretty good deal. How do you get it? Go to our website under the word research. It's all laid out there and join us. I'm Ira Epstein. You have a great day.